This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Happy Friday, everyone. It's October 11th, the day that in 2007 the markets peaked. Welcome to the Riskless Utopia podcast. I'm just kidding. This is not your advisor with NYU grad. I'm just poking fun at Elon Musk and his We Robot event last night that I caught a glimpse of. He's basically saying it's going to be boundless, free abundance, all abound. I would like to see this future. But, you know, I'll cover that event in a second. But let's cover the markets and go to the top of the format here. Across the NYSE, we had 1,172 new highs versus 138 new lows. We had 76% of stocks advancing versus 19% declining today. 34% were below their respective 50-day, 32% below their respective 200-day moving average. It was a very bullish day. Not much to really talk about in the context that it was nonstop bidding of asset prices all day through breath, as you just heard me regurgitate that data. But I want to peel this a little bit further because the close was not too great and the volume was putrid. So taking a look at the one-day performance, every sector was green. Financials started to report, and they led the way up 1.7%. Industrials came in after, up 1.5%. Real estate, 1.06%. Healthcare, 1%. Utilities, 0.8%. Communication services, 0.7%. Basic materials, 0.6%. Consumer defensive, 0.5%. Technology, 0.4%. It was almost dead last. Tech was almost dead last. But for the week, technology led. It was up 2.8%. For the week ended, industrials were up 1.5%, healthcare was up 1.3%, financials were up 1.18%. Now, what do I mean by the close? A couple things I want to cover. A quick hat tip to paying subscriber tmacro06, who had sent in the paid chat that the VIX short positions across the market is the smallest it's been since early of 2019. So that tells me complacency is maximum. Everyone is long. No one is hedged on an aggregate. And that is a recipe for disaster. So taking a look at the close, right at 4 o'clock, I would say 3:55 to 4:05 p.m. New York, we had heavy selling. So at 3:15 p.m. New York, the S&P ETF SPY was at 28 million shares traded for the day. Now we're averaging 40 million a day and we got there at the last second, but we've been going higher, grinding, melting up higher on low volume. But at the end of the day, they decided to sell the last 5 minutes of the cash session and like the first 5 minutes of after hours. The NQ, which is the NASDAQ 100 futures, pulled back in like 10 minutes back to the 38% fib retracement. The S&P futures E-mini almost got there. And although Apple has been trading in the $2 range, it lost all of the gain from this afternoon in 2 5-minute bars. So that's something to watch. Hey, maybe it's nothing. Maybe it's something. Another thing I noticed was there are others now covering the synchrony of the markets of 2024 versus 2007. Today, I saw a video by Mr. Hammond showing some of those similarities I'll post it in the show notes so you can watch it over the weekend, but this is now catching on. I feel like I was one of the first to report on it, and you all were lucky enough to hopefully have received that insight before most as a free or paying subscriber, because I shared that with everyone. What else kind of perked my interest on today's boring session? For premium members, you'll see the chart in the show notes, but I'll just walk through it with everyone. The NASDAQ up-down volume, which is basically breadth, was in this 45-degree constant bid hand of God all day. That tells me it's like a automated program. Whenever they see a red downtick on that, they just buy it. Same thing with the NYSE up-down volume, which is Vol D. I have a podcast, free podcast that covers this. Search it in the Binge NYU grad on the top navigation bar. So breadth was good all day. But when it's at that consistent angle like that, like a Bernie Madoff angle, like the prospectus for Bernie Madoff is just constant gains, it just tells me that, there's no volume. The computers are basically trading against us and just buying everything to make sure everything goes up. I have a package of macro charts that I'll be posting as well. But I've posted that multiple times already about consumers. Whether you look at credit card delinquencies, credit card balances, job openings on Indeed going down, the consumer is stretched. And one thing I noticed today was Affirm Holdings, ticker symbol AFRM. They were up like 14-15% during the day, but they closed up 12%. If they're doing well, that means the consumer is screwed because it's all buy now, pay later at high interest rates. That's not good. China tomorrow, on Saturday, our weekend, obviously their weekend too, but on the weekend, they're having a bazooka meeting, an even bigger bazooka than this week, where it actually sold off last night after that new bazooka of 500 billion yuan, which is 70 billion US dollars. They're going to announce another one on Saturday, another bazooka, and they've already preempted another meeting on Monday, just in case the Saturday meeting is a dud. Maybe on Saturday they'll schedule another one for Tuesday and Wednesday and Thursday and Friday. Quite insane. Let's see, what else did I want to cover? I'll go through real quickly what was strong and what was weak in the S&P 500. We had a pretty wide representation today because the market breadth was so positive for most of the session. So Uber was up on the whole, Elon Musk, his We Robot robo-taxi ain't that great. They were up 10.8% today. Fast, ticker symbol FAST, up 9.7%. Granger up 5.84%. Wells Fargo up 5.6%. Domino's Pizza up 5.1%. These are all percentages. Bank of America up 4.9%. JP Morgan Chase up 4.4%. Generac 4.3%. Kinder Morgan up 4.1%. BlackRock 3.6%. Citigroup 3.5%. Momentum Holdings 3.5%. M&T Bank up 3.4%. Ulta Beauty 3.25%. Match.com up 3.2%. Citizens Financial 3.1%. First Solar 3.1%. PACCAR 3.07%. Synchrony Financial 3%. TransDigm Group up 3.03%. Capital One 3.01%. Boeing up 3%. Huntington Bankshares up 2.9%. Hubble 2.96%. US Bancorp 2.94%. JB Hunt Truckers 2.89%. Discover Financial Services up 2.87%. Genuine Parts Company 2.85%. Regions Financial 2.82%. Fifth Third Bancorp 2.74%. Blackstone 2.69, Humana up 2.64, Huntington, Ingalls Industries 2.59, Moderna 2.57, Old Dominion Freight 2.56, United Airlines up 2.56, Raymond James Financial 2.53, International Paper 2.53, Goldman Sachs 2.5, NRG Energy 2.45, PNC Bank 2.4, Dell 2.35. So you'll see it's been a very broad rally today. I'm not taking that away from the market. My contention is that the volume was very weak. The close was ass. So we'll see. We'll see how much longer this low volume melt up grind can happen. Hey, we hit all-time highs on the S&P 500 today, and we're closed near it. Maybe on Monday we'll get another S&P 500 new high on the Dow. On Tuesday we'll get another new high, etc. But this can only go for so long, and this just reeks of election manipulation here. There's no news about that, conveys that we should be going this high, and there's no volume of conviction supporting this move. Every time we see volume come back into the markets, what does the market do? It falls. When the market is low volume, when we sleep or during the day, it rallies. And this is how sell side of Wall Street sells to us. This is the plumbing. This is the mechanics of it. Okay, they're selling at the top and they buy at the bottom. It's not mom and pop that sells at the top and buys at the bottom, or else Wall Street would be broke. All right. So next week, well, earnings started basically today with the banks, but next week we start to really kick off earnings. So that's going to be important for free members. Continue to watch Mag 7 because the weighting is such where if you have a day like today where Tesla's down 8%, they can still hold up the markets by pulling the other 6 up. So it's basically what's going on here. I wouldn't pay too much attention to all these Russell 2000 names that are up 5, 6, 7% in a day, but then they're down 5, 6, 7% in another day, right? That's just volatility, just back and forth. Just focus on the forest and not the trees right now. I will see you all after the weekend. Also, watch what happens on Sunday with the futures market and China. That's going to be important as well. I will see you all after the Monday session. Paying members, please stay on. I have about 18 charts to walk through with you today. That's my train.
Stand clear of the closing doors, please.